Are regulatory requirements stifling innovation? And we have a number of panelists, but before we go into the panel part, we have a presentation. Mr. Byron Gibson is going to speak. I thought so. Byron Gibson has 20 plus years of strategic brand and product marketing experience gained from working with global brands in the Caribbean. Byron's last 7 years have been spent developing competencies in the areas of mobile payments, web, and social media, with specific strengths in developing mobile marketing strategies and campaigns for execution across pan-Caribbean regional markets. Byron is the Group CEO of We Connect Mobile Incorporated since August 2010. We Connect Mobile is a Barbados-based entity that operates a full-service mobile marketing strategy and solutions consultancy and mobile marketing platform specializing in the Caribbean region. We Connect develops and executes SMS and mobile marketing strategies and campaigns in the forms of opt-in database creation, harvesting and management, contests, mobile coupons and tickets, mobile loyalty, and VIP and e-surveys. We Connect Mobile has signed an agreement with the Caribbean Confederation of Credit Unions for the use of its technology for delivery of mobile payments in the 17 countries of the Confederation, and is currently preparing to pilot the project in Barbados, St. Vincent, St. Lucia, and Dominica. So Mr. Gibson is with us remotely. I understand there are some audio issues that we might have to work through, so we don't have that wonderful echo effect that we were treated with earlier. But I would trust that it's all resolved, and so if we could hear from Mr. Gibson now, thank you.
Hi, good afternoon, everyone. Trusting that everyone is able to hear me clearly. More importantly, I'm trusting that your Friday training lunch does not mean that you'll be dropping this during my remote presentation. I'm truly apologizing for not being present here today, but circumstances dictated otherwise. That said, given that this event is being posted on patronage of the IT, I suppose that it's fitting that we have an opportunity to actively put technology to work in a demonstrably innovative fashion. I'm going to be as casual as possible. I'm going to try to bring to the matter as succinctly as possible today. And in treating to the subject at hand, my opening remark is to suggest that beyond simply administering and maintaining gatekeeper-type jurisdictional governance, regulators should realign their outlooks to be equally should be realigning their outlooks to be equally responsible for helping create and maintain a business environment that facilitates and fosters economic growth through innovation. Yeah? And this is even more essential if we're to truly encourage the growth of innovation within the Caribbean region. Far too often, however, I find that our regulators appear to regulate within a vacuum rather than with a demonstrated appreciation for the needs of the markets and audiences that they serve. Equally so, there appears to be some discord between the stated development goals of the region and at times even the mandates of the various regulatory agencies. So we cannot continue to hear calls for entrepreneurship and innovation within the Caribbean. We cannot boast of having a world-class technologies and innovative thinkers, but our operating environment does not align to allow for their application to create the desired innovation output. Let me, however, establish that I'm not here to try to bash our regulators. I actually think they do a pretty fantastic job. Rather, what I would like to do is to attempt to examine and shed some light on the subject of how regulators can and may inadvertently stifle innovation. And I will try to do so largely from the perspective of our own business and experiences within the Caribbean, and relative to experiences that I've had operating in the landscape of mobile payments, and currency in similar or same areas in Europe, Africa, and Asia as well. And let me also note that when I speak of regulators, I'm going to broaden the discussion of regulatory impact to include direct impact on business in general, but always in particular reference to our own set of experiences. Now, we've been in the market developing services since 2009 with various degrees of success. And at every step of the way, we can point to one challenge or other that we've had to overcome that has led directly back to one of several regulators. We're involved in the mobile marketing and the fintech space. And as a result, we are variously regulated or impacted by telecommunications, financial services, central banking, and fair trading regulators. Now, each of these organizations, even within the national environment, operate with a different mandate. Internal cultures are different, and they operate at different paces. So for our business, progress has often been hampered by the slowest denominator. If we're dealing with a matter that requires intervention by multiple regulators, it does not matter how swift one is. What does matter is how slow the slowest of them happens to be. Now, I'm only provided 20 minutes to address the subject, so I'll try to now attempt to do this by providing some very specific examples, again, based on our own experiences of where our existing regulatory framework has directly impacted our innovation and where I see it potentially impacting others. The first one, I refer to regulation versus efficacy. Now, in 2011, we found ourselves in front of the local Fair Trading Commission in Barbados on a matter of fair competition against a major telco who simply refused us service connectivity to their network on what we felt were very questionable grounds. Now, in the first instance, and on the plus side, there were regulatory statutes in place that made provisions for us to have a recourse via the FTC. And we have absolutely nothing but owing tributes for the professionalism of the commission staff and for the quality of their investigation. What the Act and the commission does not do, however, is to make provision for the prioritizing of fair trading investigations. And as such an investigation can literally last as long as a piece of string. The only thing that our Fair Trading Act makes provisions for prioritizing are for mergers and acquisitions, which is typically activity happening at the higher end of the food chain. And they must be completed within a given frame time. So typically what happens is the commission will drop everything they're doing to facilitate the speedy transition of mergers. But equally damaging abuse of dominance in a market, which is typically something that is meted out by a large dominant player to innovative startup-type companies, is something that can continue unabated for as long as the responding company can reasonably delay. Yeah? Now, given that fair competition is a matter that's steeped in the abuse of dominance by an established incumbent, a smaller, less financially secure, innovative company could easily be put out of business while pursuing the redress according to what the Act or the regulator provides. In this instance, the telco in question was able to delay the investigation while they brought a competing service to ours to the market. And when the FTC finally ruled against them, they further delayed by appealing in the Supreme Courts of Barbados. Now, the good thing about it is that we won at the FTC, and the appeal was subsequently withdrawn by the telco. So the ruling now stands in full. So all in all, though, even though the matter was resolved in our favor, it took 4 years, and we are now attempting to relaunch this aspect of our business while simultaneously having to incur the cost of pursuing a civil suit for damages in an environment where previously we would have had no competition, but we're now forced to compete with a major telco. That's an issue, again, I mentioned, of regulation versus efficacy. Clearly, we think that this time the regulators may very well understand how to run the operations. They may understand the Act rather carefully. However, my experience has been in many cases while they're busy, fought with the old saying that while they're busy raising the hay, the horse is starving. So that's a clear-cut case of how the current regulation or the current regulatory hamstrings or binds may actually stifle innovation. Now, we bring this home straight to our own company, and I'm not going to spend the entire afternoon again berating the point, but I've got situations of several other companies who are fighting their own similar challenges. Yeah. The second area in which I've found that regulators can find themselves, again, inadvertently contributing to the lack of innovation in the Caribbean is a lack of harmonization. I often remark that there's no such thing as a Caribbean company or a Caribbean market. I mean, there are many examples of Trinidadian or Jamaican or Barbadian companies that may operate in other islands, but when you closely examine the structures of the operations, they are not necessarily designed from a regional perspective. They're essentially a Barbadian company operating in Trinidad or St. Lucia or vice versa. And similarly, we have individual island markets. We refer to the Caribbean as a market, but what we ultimately have is we have individual island markets with various and inconsistent barriers to the movement of people, goods, and services. So we cannot truly refer to the Caribbean as a harmonized market, so to speak. Now, a key area of our business is the Fintech services, and Fintech is really based on the facilitating financial inclusion. In order to achieve financial inclusion, we need to be able to deliver our services to the traditionally excluded and most at-risk base of the financial pyramid, and to do so across all audiences. It is necessary to do so to ensure both true inclusion as well as to attain the critical volumes required to make it financially practical for us to operate in that lower band of the audience. Now, as indicated earlier, given that our business cuts across so many different regulatory agencies within even a single country, I hope you can imagine the challenges we then face when we attempt to deliver a cross-border product into multiple jurisdictions. So as an example, the OECS can be considered the closest thing that we have to a true economic union within the Caribbean. It has a single central bank, a common currency. From a telecoms perspective also, there's a common telecommunications regulator. However, within the OECS, despite having a central bank and a common central bank and a common currency, there are 7 individual financial services type regulators operating in individual territories that our company is required to engage in order to facilitate our entry into the OECS market. Each of these regulators have various national priorities for our area of activity. For some of them, it may be more important than some, and some may have better resources than some for assessing our requirements. So while it is possible to establish some types of companies within one OECS territory and operate branches in others, in many cases it's not possible to do so. And in our case, we actually require individual licensing by each individual territory, and this despite the fact that the central bank remains the primary economic guiding organization with a single currency. There's some inconsistency in that. Now, when you consider the time and the financial cost for a market that's under 800,000 consumers, you begin to realize the high cost of achieving compliance or any kind of regulatory approval for the OECS market. But from a financial inclusion perspective, we cannot exclude the OECS. So as a business, we've got to start thinking, do we lose money on the OECS in pursuit of financial inclusion, or do we have to change and recreate a completely separate business model for one section of what is already a tiny market? Now, comparably, the licensing process and the cost for, say, a larger single market such as Trinidad or Jamaica is significantly less, and it's a one-country regulator. So even from that perspective, it begins to see that there needs to be some kind of harmonization again between the regulators to ensure that, look, if we're truly working towards a common type situation in the Caribbean, there has to be a bit more harmonization going on there. So again, for our case, in order for us to deliver a consistent and a regional front-end product to the market, we're going to have to effectively create multiple business models on the back end, which comes at a bit more painful time and cost and expense. We're committed to doing it. We're kind of hopeful that over time we can kind of move past that as well. Now, I go on to my third point, which is the commercial versus the social. Now, universal access to broadband is stated as being high on the agendas of most governments and Caribbean regulators. Given the limited time, I won't go through the various benefits that can accrue from universal broadband access, and I'm pretty sure the audience here already knows it, so I don't have to repeat that one. But sadly, there appears to be little to no correlation between the desire for broadband access and the regulators and their activities within the Caribbean. With the exception of the Dominican Republic, I know who has actually tied the provision of access to spectrum, for example, when they auctioned off spectrum. I'm unaware of any other telecommunications regulator who has ventured to ensure that there's some measure of correlation between licensing and the achievement of true universal broadband access. I stand corrected there. I know that most recently the Jamaican Minister, Mr. Wheatley, has been speaking about the idea of trying to get the telecommunication companies more aligned with the objectives of the country and the region as a whole. My point is that while it may have been something that has been discussed, I have not yet really seen any true traction where that is concerned. So we still have a situation where broadband is largely a social activity, and we would like to see the returns on that, but given how we are structured, it may not necessarily happen in the very near future. Now, similarly, in the area of financial inclusion, many providers of disruptive transaction services could find themselves effectively shut out of the financial services ecosystem, or what I call the banking club, because, well, we can go into a number of possible reasons, but ultimately we tend to rely on some of the same services that commercial banks are providing. But there's no provision at a regulator level that says, well, you know what, commercial banks with your licensing, in the same way, for example, telecommunication companies are regulated at one level and expected to provide service unless they can reasonably justify why it can't be granted. Some of the services that may be provided by other innovators, there's no compulsion, there's no correlation or no harmonization between the providers of these services, the licenses they already hold or the ones they expect to obtain, and the objectives of the Caribbean market as a whole. I mean, there are a number of programs currently across the Caribbean aimed at encouraging and supporting innovation and entrepreneurship. And sometimes it pains me when I see the kind of products and services coming out of them. And given our own experience, I see the zeal that the innovators have, but I also understand the forecasted problems they're going to encounter. This, as we're having this conversation, the Pitch IT event is happening in Jamaica, where we have innovators from across the Caribbean pitching for a substantial amount of pricing for starting up their businesses. And some of those companies will find themselves in frustrating challenges within the next 12 to 18 months from a service provision perspective. My fourth point is the theory versus the practical. Now, I've seen the issue of mobile money and mobile currency in general being handled variously across the Caribbean, and it's kind of handled a lot, I find, at almost a theoretical level. I've had a chance to examine a number of regulations from across the Caribbean. I've actually worked, I won't say I'm the only person in the Caribbean, but I'm still trying to find other individuals who've actively worked on money deployments. I've worked on deployments at a strategic level in Asia, in Africa, as well as in Scandinavia. So on the developed markets, on the bank markets, moderately bank markets, and highly bank markets. Now, I've still found that we're treating this thing from a theoretical perspective, and even the regulators themselves, I mean, Jamaica is probably the most advanced with their own money regulation, but I'm seeing the other regulators have kind of sat back and almost adopted a kind of, let's wait and see what Jamaica is doing, Notwithstanding that the BOJ first issued the guidelines somewhere about 3 or 4 years ago, and they've just actually approved the first commercial banking entity. I do see a number of possible shortcomings in terms of how Jamaica has approached it, and as opposed to simply saying I see some challenges, I'd much rather like to see it from a regional perspective. I would like to have seen a different approach from our regional regulators. I'd like to say that what we can do as a region is quite possibly the regulators meet and agree first of all on a desire for having alternative payments, whether it's mobile money or cryptocurrencies or whatever the case is, become a part of the financial services ecosystem, and at least harmonize in your desire for doing so. Then you need to be able to indicate the key areas of concern for the adoption and the licensing of such services. Last of all, you should then invite innovators to suggest business models and or solutions that can meet these requirements. I'll pause a bit and say that when the idea of cryptocurrency was first floated across the world, it's still something that's up in the air. The US government took a very interesting position, which was they did not understand cryptocurrency. It is still an emerging type business. They did not want to go ahead and invest a lot of money. They had no in-house resources for truly investigating the matter properly, but they want to be able to provide an opportunity for the potential to show itself. And what they did was essentially say, look, you, the business community, we will tell you exactly what the primary considerations are, the areas that we have for concern for any kind of currency or any kind of financial transaction business. And you then can take the responsibility of creating compliant business models. I thought that was novel, and I thought that was the approach the Caribbean could have and still can take in trying to open the market to facilitate the innovation that may come from the fintech space. Because unlike many regions, for example, North America is more developed, we can benefit more from emerging technologies and financial services than they can. Now, this approach would have had a number of benefits, and I'll list the following ones inter alia. One, you would have had regulators who would have been able to make known all the concerns surrounding currency regulation and management. There would have been an air of transparency regarding how you can get into the business yourself. Two, regulators would have been informed by specialists in the mobile money domain and not necessarily have to make the investment themselves or to kind of meander through other people's regulations that may not be well suited for the Caribbean market. Best practices at an international level. My experience has been that the subject of mobile money, globally, mobile money solutions have a historically poor record for being transportable or they're perishable across borders. Perhaps the biggest known solution for M-Money in the world is M-Pesa. And M-Pesa has been successful largely in one country. It has struggled to make it past any other country in Africa. And even though its owner, Safaricom, is on Vodafone has 300 million customers across the globe, and they've not been able to even implement M-Pesa across their own customers and their own network. So the challenges in trying to look for best practices somewhere else for mobile money for our region is that you will very well find that mobile money, again, the considerations are very region specific. Now, the third benefit of the regulators taking the earlier approach I mentioned, they would have served this time and money and costs associated with undertaking the current approach. And last of all, they would have been able to work with innovators in ensuring that the regional environment was open for well-governed mobile money business. They would have been exposed themselves to a degree of innovation from the market side of things rather than simply regulating from the administrative side of things. Now, one of the hats that I wear is that of a co-founder of the Orbit Innovation Project. And the Orbit Innovation Project is a privately funded project that aims to drive and support innovation in Barbados and hopefully eventually the wider Caribbean. We facilitate it by training, accelerating, mentoring, and funding innovative startup ventures. We list as our partners Ministry of Resource Development Project, Ministries of Labour and Education, the University of West Indies Cayfield, and the Barbados Community College, to name a few. I also work with the Department of Computing at UWI in Mona, helping prepare students in that faculty in that program for the world of business and for the world of entrepreneurship. In my Orbit capacity, I function as a combination of investor, business coach, and mentor to a number of startup enterprises across the Caribbean. And last week, I was part of a graduating event for 6 student-led startup technology enterprises at the University of West Indies in Cayfield. We're now mentoring them and incubating them to bring their projects to market. Earlier on this week, on Monday and Tuesday, I was in attendance at the graduation of another 6 student-owned and already established companies under the CIBC First Caribbean-sponsored seed program, again at the University of West Indies in Cayfield. So from my perspective, I can categorically state that the spirit of innovation and entrepreneurship is alive and growing in the Caribbean. However, given our own experience as a company, most of which I don't have time to mention here, I can also categorically state that innovation in the Caribbean is currently outpacing regulation by by a similar or greater margin to what Usain Bolt would outpace me in a 100-meter race. Yeah. Now, in closing, I'm aware that a number of my points today may very well have leached into the area of policy. However, my own view is that given their market-facing rules, given the fact that ultimately regulators are meant to regulate our businesses, my personal view remains, has been for a while and remains, that regulators ought to themselves continually be evolving and innovating in their own roles and activities without necessarily overstepping the boundaries of their listed mandates. Like any innovator, they can achieve this by better researching their markets and activities in the markets, facilitating proactive and ongoing engagement with their audiences and stop being so reactive, improving data collection and analysis, and by using knowledge gained from these activities, then set about influencing and informing those changes in policy that would probably better allow them to be better equipped and ultimately more effective regulatory practitioners. I thank you very much for your time.
Thank you, Byron.